Productive trade talks between the United States and Mexico last week helped push equity markets northwards, with notable performers being the tech-heavy NASDAQ and the S&P 500 breaking all-time record highs. Unlike we've seen in recent weeks, there was little movement to report in the currency markets. However, this is not likely to be the theme in the coming weeks. We start on Monday with the US and Canadian markets closing early for Labor Day, which could see a slight lack of volumes and volatility in these markets during the latter part of the day as a result. There is, however, a whole raft of manufacturing PMI data coming from China, Japan and Europe. Although not normally the spiciest macro data that is released, it's important to pay attention as the manufacturing sector dominates a large part of total GDP and is an important indicator of business conditions for a country's economy. In the early hours of Tuesday morning, the Reserve Bank of Australia provides us with their latest interest rate decision and statement regarding inflation and future rate hikes. It is to note that the AUD has struggled against the majority of currencies since the turn of the year, so any mention of higher inflation or future rate hikes could see the Aussie dollar get a shot in the arm. In the afternoon, it's the turn of the US to update us on their manufacturing PMI. Midweek data continues in Australia with gross domestic product or GDP figures at 2:30 BST, followed by US trade balance data an hour before their markets open and an interest rate decision and statement shortly after from the Bank of Canada. If the BOC is hawkish about the inflationary outlook of the economy and raises their interest rates, it is typically positive or bullish for the Canadian dollar. Likewise, if the BOC has the opposite view on the economy and keeps the ongoing interest rate or cuts the interest rate, it is normally seen as negative or bearish. The main focal point on Thursday will be the US ADP employment change, which is often viewed as a precursor for the main jobs data, which is due on Friday. Euro dollar could be in for a busy day on Friday when we kick off with European GDP hitting us first at 10 AM BST. However, the big climax this week comes from the historically volatile US non-farm payrolls. This represents the number of new jobs created during the previous month in all non-agricultural business. The monthly changes in payrolls can be extremely volatile due to its high relation with economic policy, which is made by the Federal Reserve. This figure is accompanied by the average hourly earnings. The central bank pays close attention to this when setting interest rates. It is a significant indicator of labour cost inflation and of the tightness of the labour market. For more information on company results and our economic calendar, please check our week ahead. Thank you.